All right, so let's take the discussion forward with one company which has made stunning results for shareholders in a matter of what? A month. Harit Zaveri, Joint Managing Director of RBZ Jewellers. The stock is locked on upper circuit today as well, the way it has been since it got listed about a month and a half back. Harit, I am assuming that the people are understanding how much value you left on the table since your IPO, and that is why the kind of movement which you're seeing, first it was the 5% circuit, now 20% circuit. Now you can talk to us on outlook of the company much more openly now that the company's got listed. Talk to us about in value terms or in volume terms, how much volume are you aiming at for FY25?
Thanks, Itina, for having me here. In volume terms, I think the company last year has done around 1,059 kgs, and this year we are on our set targets to do about 1,200 kgs. And subsequent 2 years, because the company has raised 100 crore rupees of equity, and we are going to raise again the debt equity ratio will be maintained as 1:1. So again, there will be a raise of debt of 100 crores plus. So in that case, we are aiming to double our volumes in the subsequent 2 years. I think the company should touch at around 2 to 2.4 tons in the subsequent 2 years. I think this is the broader outlook of the company, and the proportion of the business divisions will remain same. Uh, so uh, I think apart from that, the EBITDA and the profit margins level should remain consistent or improve. So in that case, the company is actually going to, double its reserves, and the reserve and service already doubled, and the same result has to come on the bottom lines.
Sure. So that helps, Mr. Zaveri. You're talking about 1,200 kgs this year itself, probably doubling it in a couple of years, and the margins are likely to remain stable because the overall product mix is something which is likely to be closer to what it is right now. But I wanted to get a sense from you in terms of the client demand and the demand trends on the ground. Are you witnessing something different in terms of, is it the high value product that they're going in for? Is it, the smaller ticket items? If you can help us understand even geographically, is there a bit of a disparity or any specific demand trends?
Sister, here the case is quite different. We are an organized manufacturer, and organized retailer has always been wanting to procure goods from organized manufacturers. See, organized retailers are having the resources and they are expanding very strongly. Now, given the task that in a year they are opening 50 showrooms, 100 showrooms, demand is bound to come to us. The wedding demand is robust. India has a great population. According to the CareEdge report, there are 11 to 13 million weddings happening in a year. So as far as as a company we are concerned, there is I don't think so there is any it's a clear demand drive. Organized retailers are 100% in aggressively, and because there is a de-link that there are 40% organized retailers and only 15% of organized manufacturers. We have our company is growing by volumes, which is actually a fundamentally strong position when you compare to any other. The industry grows at 2.5% volumes. We are growing at around 10 to 15% volumes. And we are supposedly to grow by, much more volumes in the subsequent 2 years because of the funds coming in.
Okay, Harit, one thing is that I was just looking at the list of your clients, obviously marquee names, top of the line. But I want to know, one is you're doing more volumes with, say, Malabar, Joy Alucas, Sencos, and Titans of the world. The other part is that more and more unorganized side of the jewelers also want to do quality work with you. Companies who are deploying a lot of technology and precision manufacturing. Are you seeing that shift also happen, and are you being approached by new clients beyond these marquee names as well?
Correct. So we have already got a good pool of the independent retailers across India, and those are shifting from, let's say, one store to multi-chain of stores. So there are two things happening. One, an organized retailer who is already there is expanding. Another one is the segment is also getting transformed into organized. So with this two, both the shift happening simultaneously, I think we have got good names already on the basket, and the demand is there to fulfill. Generally the season starts in the jewelry industry. The season starts from the first or the last week of July, and then the whole rolling happens in an aggressive way. But there are names there are names already there, and the demand is there. And I think with the funds coming in, we will be able to fulfill them much better.
Sure. And a quick question, Harit, on the B2C model that you have. Right now, you only have one showroom, I understand, in Ahmedabad. Do you have plans to expand your B2C kind of profile as well and open more showrooms? Or would you like to stick to B2B model?
See, right now, B2C has got a good, as a company, we always imagine that, in whichever segment we are in, let's first, at least we have a headroom of 3x. Let's say the retail store is right now doing 135 to 140 crore. This year, it might be doing, it might pace up. I wouldn't want to give you the numbers, but, the percentage of retail versus wholesale will remain same. So in that case, if the demand of, if let's say wholesale is moving to, let's say 2x in terms of volume, retail should actually go at the same pace also. So right now we are not looking for to clearly answer. Let us first optimize the retail store that we have, and yes, our outlook is 100% more focused into being an organized manufacturer and serving those retailers who are having their resources and who are compliant, and they're planning for heavy expansion, which will clearly drive the demand on our side. And we are it's a low hanging fruit, so let's catch them.
And Harit, just a quick one-word answer. You said margins are stable, so between 13 to 15% going forward?
So again, you must understand the business model in terms of margins. I think we are into servicing, we are into retail in the retail side, and then we are into the wholesale side. So servicing obviously will have much more margins as compared if we take it from the top line segment. On the volume side, it will on the volume side, if you calculate the margins, it will be lower side, and the retail, and then carried forward by the wholesale. So in that case, I think the one has to look to my business model more accurately to actually judge my margins. But yes, on the ROCE part and the ROE part will remain stable.
Harit, on that note, we'll let you go, but